Good morning, good morning, good morning. It is finally Friday. We have made it through the week. Well, almost. Just got to finish off. You, as always, are listening to the Morning Blast with myself and Mr. Michael Brown. As usual, myself and Michael will be giving a rapid, not actually not that rapid, it's now about half an hour. I remember when these were 10 minutes. But me and Michael will be jump starting your trading day with an explosive daily market preview and just to look back at what's happened before. But before we do, I will get the legals out the way. As usual, especially on a Friday, nothing we say on this Spaces event constitutes trading or investment advice or infers any kind of endorsement by PIQ or indeed myself, Ryan Paisley, and the wonderful, the magnificent, the resplendent Mr. Michael Brown. And I'm not just saying that hoping that he won't spend too much money on my bill at lunchtime.
Very
Yeah,
good
well, that
morning to you,
made your day,
Ryan. Good morning,
that
everyone.
made your day,
Happy.
didn't it?
It did, yes. Good morning, everyone. Happy Friday. It improved my mood actually as well because I've just spilt a load of water on myself as I joined this call. So
It's okay. You could admit you pissed yourself.
no, I haven't got. I know I act quite old and I stagger around everywhere. But I haven't quite got to that stage of life just yet.
Yet.
Yet, give it another week.
Yeah, tell me about it. What's been occurring, my dear friend?
Oh, indeed. Let's get into things. It was a third day in a row of relatively positive risk appetite yesterday, with the S&P adding another 2%, the Nasdaq 100 adding just shy of 3%. The S&P actually trading north of 5,500 yesterday and holding gains north of that level this morning. The reason why I mention that is because that had, until yesterday's trade at least, been pretty much as near as makes no difference the top of the range that we traded in since Liberation Day on the 2nd of April. So I'm sure all of the technical analysis folk are going to be getting very, very excited about that. The reason why we moved higher yesterday and why sentiment seems to have improved is because we've had quite a lot of trade news, and on balance, most of this news has been positive and pointed to something of a softening in tone from the United States, although, of course, all of this is heavily caveated and subject to change pending the next Truth Social post from President Trump. In terms of those headlines, oh, there's a horrible echo going on there. In terms of those headlines, the most notable, or the first that we heard yesterday, came via sources cited by Fox Business. This was that the US was reportedly nearing an agreement in principle on trade with India, although there were no details given on the timings as to when that agreement could be signed. I think what was perhaps more important within these comments or this reporting was that there was also murmurings that this agreement could then serve as a template for other agreements with countries in the Asia Pacific region, such as Japan, South Korea, and Australia. And actually, the Trump administration have been touting the fact that a deal with South Korea is coming along quicker than they had previously been expecting. Again, a lot of talk, a lot of rhetoric. I would argue that concrete progress is somewhat lacking at this moment in time, but nonetheless, the market is liking the sound of the sources' reports that it is hearing. We then heard from President Trump, who was speaking in a lunch with the Norwegian Prime Minister. He said that the United States have been meeting with China and that, quote, they had a meeting this morning, only he wouldn't tell us who they were, and said that it doesn't actually matter. Well, Mr. President, it does matter. Was it, some low-level intern in the State Department holding a phone call, or was it you, or was it Marco Rubio? We do not know exactly what level that meeting took place at, but it does appear that there has been some degree of engagement between the two sides. Other trade headlines
Just
centered.
sorry, just
Oh,
on
go on.
that. We did have this morning China coming out and saying we have no idea what he's talking about. We've not been speaking to anyone.
Well, indeed, I was just going to get onto that momentarily
So
because
I,
they
I
have.
did I did say tongue in cheek yesterday that Trump has basically been calling Panda Express or the local Chinese restaurant. I'm starting to think that maybe that might be true.
Yeah, I wouldn't put it past him to be. I mean, he's been negotiating with himself, so talking to himself is probably the logical next step at this point. But you're actually right. We have had a bit of sort of bucket of cold water poured on some of this by China this morning, as you said. Just to recap some of those other trade headlines we got yesterday, ABC News, they were reporting that apparently the Trump administration is weighing some exemptions for Chinese auto parts coming into the United States. This was, to be honest with you, a bit of a rehash of the FT reporting meeting that we had a day or so ago, of course, reporting that the Trump administration denied. And then Bloomberg sources overnight reporting that China are apparently
China.
considering some exemptions on their side of the equation, considering the removal of additional tariffs on imports of medical equipment, industrial chemicals, and plane leases from the United States. Very specific. Basically, the parts that are sort of hurting the Chinese economy the most, you would assume. But again, we have heard from the foreign ministry spokesman Gua in the last sort of 15 minutes or so, saying that he is not familiar with these reports, and as you said, just sort of pouring a whole load of cold water on all of what we heard yesterday. Away from trade, there were
Away.
oh god, there were a few other bits and bobs worth mentioning in terms of yesterday. We did have some fairly chunky gains across the Treasury curve. The 2-year yield, and the 10-year yield, both falling by about 7 basis points apiece, trading to 3.8% and 4.3% respectively. This came on the back of some relatively dovish remarks actually from the Fed's Hammack. She was noting that while it is too soon to consider a rate move in May, the Fed would not be afraid to move quickly if necessary, and that the FOMC could move in June if there were clear and convincing data, basically necessitating that they do so. I would just say that, of course, Hammack, while she has been one of the more hawkish members on the FOMC in recent months, she is a non-voter. She does not vote until 2026, so do bear that context in mind in terms of her remarks. We also had some relatively dovish comments from the Fed Governor Waller yesterday. I'm just taking everything he says at this point as an audition for Chair Powell's job, to
Yes,
be completely
definitely.
honest with you,
Definitely.
especially when he says in a Bloomberg interview, and I quote, "The president is free to say whatever he wants." I mean, just wander around with your CV on a bloody sandwich board at this point, mate. It's quite obvious what you're doing. Speaking of dovish central bank remarks, though, we did have the big man from the BOE, Andrew Bailey, popping up on television yesterday. He was also sounding pretty dovish, to be completely honest with you, saying that while the inflation effect of tariffs is hard to predict, the Bank of England are focused on the growth shock that those tariffs will cause. Of course, that comes after what was, frankly, disastrous PMI data a little bit earlier on in the week. And actually, money markets now pricing a very slim chance that the BOE decide to pull the trigger on a larger 50 basis point move at their next meeting on the 8th of May. We currently see 27 basis points of easing priced for that meeting, which equates to roughly a 10% chance that they do decide to
What's
go for a 50 basis point
I know
move.
we kind of mentioned this yesterday, and you were saying that it's still very unlikely. Are you still in that camp? Very unlikely.
I am, although I think the way the BOE would probably want to play it is 25 and then some really dovish guidance.
Yeah. Yeah.
If you
Yep.
think
Yep.
about how
Yep.
they've been talking about a gradual and careful approach to further to further steps towards policy easing, you can easily change that language to something that would sort of stress
Yeah.
a more rapid
Absolutely.
approach
And
to removing restriction.
let's be honest, really dovish language would be good enough. Yeah, would put 25 basis points into the market anyway. So yeah,
Yeah, absolutely.
what? Yeah, keep your powder dry on the actual rate, and then just really milk it up on the presser and then the statement. So I completely agree with you there.
Indeed. Away from all of the central bank nonsense, we did have some economic data out yesterday. The IFO surveys from Germany actually coming in better than expected. The business climate metric rising to
Boo!
86.9 for a prior 86.7. The current assessment and expectations gauges also beating consensus forecasts. I do just wonder whether there's something dodgy going on with the data there. I struggle to see how. I frankly struggle to see how the German economic outlook has improved over the last month, but there we go. We also had the weekly jobless claims data out of the United States. Initial claims rising by 222,000 in the week to the 19th of April, bang in line with consensus expectations, while the continuing claims number that rose by 1.841 million, considerably below the prior 1.885 million. And of course, that continuing claims metric does coincide with the April non-farm payrolls survey week. We also had the latest durable goods orders figures out of the States yesterday, orders rising by 9.2% in the month of March, well above the 2% expectation and the prior 1%. As we actually flagged in this call yesterday, the durable goods print had a big skew from
Yeah.
transport. Transport orders were up by 27% month on month. And actually, when you drill into that a little bit further, aircraft orders, excluding defence, rose by a frankly ridiculous 139% month on month. So do take that durable goods orders beat with a huge pinch of
Just a
salt.
quick
In,
question on
go on.
that. I'm kind of pretty sure I'm going to answer my own question when I speak, but bear with me. Um, is there anything with the tariffs that mean that if orders were placed with, say, Boeing before the tariffs come into effect, that they're not subject to the tariffs?
I
Because
don't
I
know.
only say this because that number is ridiculous, and it would explain a front running of tariffs for Boeing orders. If you see my logic there.
Yes, no, that is a very good point. My hunch is that you pay when the good actually
Yeah.
moves,
You know
as
what?
opposed to
The fact
when
that
you order it.
Yeah, the fact that Boeing jets are being sent back from China because of the tariffs, and they must have been ordered a long time ago, make me think that you're probably right. So, as I said, I've answered my own question. I'll sit back in the corner.
You go back into the corner. I'm going to talk about some corporate news because we did have some earnings out after the close last night. Alphabet, aka Google, delivering very, very solid report, beating on both top and bottom line, and also beating on pretty much every single revenue line as well, while also approving an additional share buyback amounting to 70 billion quid. They traded about 6% higher in the after hours session last night. We also had earnings out from Intel yesterday. They also delivered top and bottom line beats on their Q1 figures, but their Q2 guidance was actually relatively soft, guiding for revenue between 11.2 and 12.4 billion, well short of the 12.9 billion that participants have been looking for, and their shares slid by about 3% post market yesterday. Sticking with corporate news, reports in the FT this morning that Apple are planning to source all US iPhones from India as soon as 2026, which is obviously next year. This is, as we've previously discussed, basically Apple trying to get around the tariffs that have been imposed on China. But I think the message here is that Apple are expecting these tariffs to stay in place for a relatively prolonged period of time. You would not move your entire supply chain around if you were expecting the tariffs to be withdrawn in a matter of weeks. Sticking with the corporate front, in the banking space, Nomura, who reported their earnings this morning, Bloomberg sources reporting that they are looking to get back into the prime brokerage business. You'll recall, 4 or 5 years ago now, Archegos Capital, Bill Huang's vehicle, when they blew up and, they took Credit Suisse with them and they almost took Nomura down as well. Nevertheless, executives at the Japanese bank are expecting that they're going to generate more than $1 billion in annual revenue from this renewed foray into prime broking. What on earth could possibly go wrong with that one? Last but by no means least from me, a couple of data points that we had out overnight. Firstly, from Japan, actually your favourite data point, Ryan, the Tokyo
Indeed,
CPI figures
indeed.
coming in a little bit hotter than expected, actually, with the headline metric coming in at 3.5% on an annual basis, above the prior 2.9%, while the core metric, excluding fresh food and energy, that rose by 3.1%, which is a very chunky rise indeed compared to the prior 2.2%. And we also had the latest retail sales figures out of the United Kingdom this morning. Headline retail sales rose by 0.4% on a month-on-month basis in March, well above the top of the Bloomberg forecast range. Excluding fuel, sales rose by 0.5% compared to the 0.5% decrease that participants have been expecting. And actually, it's worth noting that that is the third month in a row that UK retail sales, both headline and core, the excluding fuel metric, have surprised to the upside of consensus expectations. So just something worth bearing in mind, despite all of the doom and gloom, which certainly I've been peddling as well. The UK consumer actually seemed to have a relatively decent first quarter
Well,
of this year.
because we might as well spend money. So what else we got to look forward to?
Well, quite, and also after April, we're not going to be able to spend any money anyway because the price of everything has gone up. So.
Well, although I think today's lunch may contribute a few basis points to the number. You're not meant to laugh that much, but okay.
Well, I'm now thinking how many basis points can I contribute?
Oh, fucking hell. Michael, thank you for now. I'll crack on with some overnight news roundup from the amazing Zach, who is back from his holiday on the weekend, so can't wait to take him out for some lunch. McDonald's all round for Zach. So just some headlines from our overnight news roundup, which as usual is posted on Substack, is on Twitter, etc., etc. Do subscribe to it because it is the best way to keep up with all the overnight news headlines whilst you are sleeping, assuming you sleep. So starting off with trade headlines, China is weighing suspending its 125% tariff on certain US imports, including medical gear, industrial chemicals, as the trade war pressure mounts. However, China's foreign minister denies current tariff talks and deflected questions about exemptions to other departments. Aircraft parts are now exempt from some Chinese tariffs, while Beijing surveys US businesses to identify goods that can't be sourced elsewhere. China's finance minister warned that the G20 that trade wars are undermining global economic stability, urging equal-footed dialogue. As Michael alluded to just then, Apple plans to import most of its US-bound iPhones from India by late 2025, reducing exposure to Chinese tariffs. Walmart launched a program to help Chinese exporters sell domestically as US demand fades. US pork exports to China fell 72% last week. Soybean purchases are also down sharply.
Oh, I
US
hope you're not telling any porkies about
Oh God, that was laboured. I don't like that one. US LPG shipments are being rerouted away from China due to tariff conflicts. Japan and US reaffirmed dialogue on FX policy, but ruled out any formal currency targets. UK Chancellor Reeves praised Trump's trade stance and pushed for UK tariff relief. Malaysia has begun
Well, she
negotiations.
is.
Go
Sorry, I was just saying on our beloved Rachel Reeves. She is
on.
meeting the Treasury Secretary Scott Bessent and then the NEC Director Kevin Hassett a little bit later on today as well.
What a meeting of minds that'll be.
Well, exactly.
Malaysia has
You know,
begun
hedge fund
negotiations.
manager and customer service
Oh,
agent
mate,
across the table from each other.
mate, we should invite them to lunch if they're paying. But Malaysia has begun negotiations to avoid Trump's proposed 24% tariff. In macro news now, so Fed's Kashkari said trade uncertainty is quote, making him nervous about the potential for big layoffs. CEOs from American Airlines, PepsiCo, and P&G warn tariff unpredictability is chilling corporate planning and consumer confidence. I think this is something we've broached on quite often, is the fact it's not even so much what the tariffs are, what the physical number are. It's just no one knows what's going on. So you can't even plan for bad tariffs or good tariffs because you just don't know. So I think that's what everyone's demanding now, is just some kind of guidance.
Hmm.
IMF chief called this a quote new era for global economy, citing recent policy shifts in Germany, Argentina, and the UK. China's Politburo said it will cut the triple R in a timely manner, quote, and is preparing emergency plans to cushion external shocks. The PBOC is injecting more liquidity to soften tariff impact. Policy will remain, quote, moderately loose, unquote. Core inflation in Tokyo, as Michael alluded to just now, hit a 2 year high in April, led by food prices and subsidy rollbacks. BOJ Governor Ueda said more hikes are possible if core inflation keeps moving towards the 2% target. Japan's PM Ashiba, unveiled an emergency economic package to offset tariffs, including fuel subsidies and financing support. Russia's oil drillers are ramping up output ahead of a potential easing of OPEC plus limits and sanctions relief. Just on OPEC plus, sidebar on this. Um, my guess is, from what I'm seeing, what I'm reading, is OPEC plus's days are numbered. I think in the next couple of years we will see that disbanded because it's just completely falling apart and not worth the paper it's written on. But there you go, bookmark that.
And
Hold
of
me to it.
course, do
I,
do remember, of course,
I,
ladies and
I
gentlemen,
wasn't
that
going to
Ryan
mention
did
it.
used to trade oil. In case he's never mentioned that to you
I
before.
wasn't going to mention it, maybe, but no, you mentioned it. South Korea denied reports it is pressured to commit to US gas project in Alaska. Hungary's new central bank team has filed fraud charges against the former leadership. Well, if you got the keys to the safe, you might as well use them. If Richard's listening in, I didn't mean that. My CFO. The IMF's Argentina loan faces internal dissent due to the country's close ties to Trump. The Fed and the FDIC have retracted prior crypto guidance in a bid to support innovation. Geopolitics now. Pakistan confirmed overnight exchanges of fire on the Indian border. Just sidebar on this. This is the India Pakistan kind of, well, we'll call it a conflict at the moment. This is definitely something to keep an eye on. These two nations are very, 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 very hateful to one another. It's very deep rooted as well. It goes all back to the partition. And I hate being one of these people that kind of predicts war or something like that, and I'm not. And I'm not saying I don't think for a second it will, but it's something that's concerning me on a geopolitical level because Pakistan's already said that if India make any moves to disrupt the flow of the Indus, which is the river that's kind of it starts in India and it moves into Pakistan, and Pakistan rely on this completely, the Indus River, for their water. They've said that if India touch it at all, that there's going to be a declaration of war. And this treaty goes back to the 1960s, I believe, the Indus River Water Management Treaty. Definitely something to keep an eye on. It'll be one of those things that kind of bubbles away. It's not really important to us until it's really fucking important. So just have an eye on it. Would be my advice. China, Russia, and Iran met with the IAEA, I always struggle with that one, to discuss Iran's nuclear program. European research institutions are pausing science collaborations with China over data protection concerns. And finally, so just some equity and corporate headline news. Alphabet, as Michael said, beat Q1 expectations and reaffirmed its 75 billion AI capex plans. Yahoo, I forgot they still exist, may bid for Chrome if regulators force Google to divest the browser. Intel's Q2 forecast missed expectations, adding pressure on its new CEO amid US China trade headwinds. Meta is laying off over 100 workers in its Reality Labs unit. Tesla's Q1 earnings benefited from 12% from excluding crypto losses. On this one, Tesla, or Musk, been a bit cheeky here because when they were up on their crypto assets, they included it into their statement. When they were down on their crypto losses, they found a way to exclude them.
Funny that.
Yeah, funny that, right? Big tech firms are bracing for a slowdown in ad spending linked to tariff volatility. What else we got? Just a couple more. Merck is nearing a 3.5 billion acquisition of SpringWorks Therapeutics. And
Sorry, just on that one,
yeah,
that's not the Merck that you think it is.
no,
That's the Merck in Germany rather than the pharmaceutical firm in the US.
I was kind of giving our listeners some credit because they were it's about the acquisition of a therapeutics company.
Well,
No, you're
it
right.
caught me out last night.
Oh, did it? Oh,
Yeah.
the mask is slipping. The mask is slipping. And finally, for me, Qatar Airways said it has stockpiled spares to withstand tariff shocks. And that's it for me. Back to you in the studio.
And as I said to Zach earlier, looks like things could be taking off for them as turbulence
Oh,
hits the rest of
fucking
the
hell.
industry.
Oh, please don't.
Right, in terms of today, then, not that I'm going to be at the desk for much of this because I'm going to be rinsing Ryan's credit card, but we do have
No.
a few things of note on on the data docket later on. 1:30 this afternoon, we have the February retail sales data out of Canada. Sales expected to have fallen by 0.4% in the second month of the year, building on the 0.6% decline that we saw in January. StatCan would also release their flash estimate for the March retail sales number along with that release. And then at 3 o'clock this afternoon, we have final consumer sentiment numbers out of the University of Michigan. That index expected to be revised lower to 50.6 from the preliminary 50.8. The March figure was at 57. And of course, do keep an eye on the inflation expectation components as well, seemingly US consumers continue to forecast inflation in Venezuela as opposed to the United States. In terms of other bits and bobs to keep an eye on today, we do have a couple of notable corporate earnings before the market open,
The
including
Stafford
those from
Hotel.
AbbVie. Well, yeah, that as well, including those from AbbVie and Phillips 66. And central bank speeches today come from the likes of the BOE's Green and the SNB's Schlegel. Of course, as always, do bear in mind that there is the potential for some de-risking to take place into the weekend, and participants, of course, remain on alert for any comments from President Trump. And in light of that, there is also the potential for some gapping risk at the market reopen on Sunday evening, particularly after President Trump was speaking yesterday about holding a whole host of meetings with various world leaders in Rome this weekend, where various countries will be gathering for the funeral of Pope Francis. In addition to that, do bear in mind that it is a very, very busy economic calendar next week. Of course, the week wraps up with the April non-farm payrolls number and some beers, presumably. But it's also a very, very busy week of corporate earnings next week. In fact, the busiest of Q1 reporting season, including some of the big tech names such as Meta, Microsoft, Apple, and Amazon, all reporting next week as well. But to end on a positive note and news that I'm sure we can all rejoice about, it is also at close of play today, the beginning of the Fed's pre-meeting blackout period. So at least we
Yes.
won't have to worry about what that lot have to say over the next week or so ahead of the next FOMC on the 7th of May. And for this morning and this week, that is all from me.
Wonderful, Mr. Michael Brown. Thank you, as always, my very dear friend. Jokes aside, I'm very much looking forward to seeing you later for some nice lunch. Happy meals all round. Listeners, thank you so much for tuning in. We really do appreciate it. I know I keep saying it, but especially our regular ones, we really do appreciate you. Just a shout out. I've kind of, whilst we were talking, I've made a decision on next week's drink venue. Obviously, it'd be our third non-farm pints. So if anyone in and around London wants to come and meet for just a few beers and catch up and just talk shit, really, I think we're going to do it in the Oyster Shed on the river. This
Oh,
predict
very
it'll be
good
nice.
shout.
You know what? Just this kind of predict that it's going to be lovely weather. We can sit on the riverbank, have a few bottles of beer, mug Michael Brown up, and best days.
Throw the dwarf in the river. That's always a fun game. Off
Oh,
you go, Ryan.
yeah, yeah. Okay, right. On that note, thank you guys. Right. Oh, but genuinely though, me and Michael really do appreciate your feedback and all of that stuff. Much love. And if you're at whatever you're doing this weekend, stay safe, and we'll see you all on Monday. Goodbye.
Bye for now.